This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Record finish again. The Dow closes at yet another all-time high as Caterpillar and 3M ride the wave of a strengthening global economy. Cheap tickets? Airlines are adding seats. That means fares could drop. Good news for flyers, but a worrying development if you own airline shares. And the Amazon race, why the competition for Amazon's second headquarters is taking a new, secretive turn. Those stories and more tonight on Nightly Business Report for Thursday, January 25th. Good evening, everyone, and welcome. I'm Tyler Matheson. Sue Herrera has the evening off. Well, the Dow closed at a record for the 10th time this year. For the S&P 500, it was its 13th record finish in just 17 trading days so far. Earnings helped drive the blue chip index as some of the world's biggest global companies easily beat profit expectations. They also said things are looking up for the rest of the year. At one point today, more than 20% of all of the 30 Dow components were at all-time highs. Here are the closing numbers. The Dow Jones Industrial Average advanced 140 points to 26,392. NASDAQ fell nearly 4, though, but the S&P 500 rose by about 2. Once again, the dollar came into play, adding some volatility to the trading day. Now, yesterday, we told you about the dollar's impact on the stock market after the U.S. Treasury Secretary said a weak dollar benefits U.S. trade. Today, other officials chimed in, including President Trump. Here's Steve Leisman.
It was a wild ride for the dollar today, sent falling and then flying by comments first from a European official and then from the President of the United States. European Central Bank President Mario Draghi got the dollar off on the first leg of its round-trip journey with comments indicating he didn't care much that the euro had recently strengthened against the greenback.
We don't target exchange rates, and we say exchange rates are important for growth and for price stability. Now, in certain movements in the exchange rates to the extent that are justified by the strengthening of the economy are part of nature.
The euro surged from 124 to 125 against the dollar, a level not seen since 2014. The way traders saw it, Draghi didn't much mind the strength and didn't sound like he was going to do anything about it. But someone did mind. His name was President Donald Trump. Speaking to CNBC exclusively in Davos, Trump came down firmly on the side of a strong dollar.
The dollar is going to get stronger and stronger. And ultimately, I want to see a strong dollar.
The effect was immediate and dramatic. Within an hour, the dollar regained all it had lost on the day and then some. Underpinning the dramatic action, these are nervous times for currency traders and the global economy. Treasury Secretary Steve Mnuchin stepped somewhat out of protocol and said a weaker dollar could help U.S. trade, which is true and not unprecedented, just not very often said by a Treasury official. Trump, meanwhile, has controversial ideas about free trade, more bilateral, less multilateral, willing to rip up trade deals if he doesn't get what he wants. But the president also told CNBC he doesn't like talking about the dollar and that, quote, nobody should be talking about it. So perhaps he's pushing his administration to walk the old line, where, for official purposes at least, the only good dollar is a strong dollar. For Nightly Business Report, I'm Steve Leisman.
And now to those earnings we mentioned earlier. A Caterpillar had a quarter few investors saw coming. The world's largest heavy-duty equipment maker reported profits that trounced expectations. The company also gave upbeat profit guidance for the full year, and that lifted shares. Morgan Brennan has more on the Big Cat's blowout quarter.
After 4 years of sales declines, the world's biggest maker of heavy machinery snapping its losing streak. Caterpillar reporting an 18% jump in revenue for 2017 as mining and construction rebounded around the globe. On a call with analysts, CEO Jim Umpleby saying economic indicators are positive and he expects a strong start to the new year.
We are positioned to capitalize on continued sales momentum or quickly adjust should conditions change. We also plan to profitably grow the company by investing in expanded offerings and services, the two additional major focus areas in our strategy.
After a years-long slump tied to the collapse of commodity prices, sales are picking up across all of Caterpillar's major segments. Construction, energy, and mining equipment are all expected to grow this year. and just as aggressive restructuring within the company has taken root. Analysts say Caterpillar is poised to prosper.
2 or 3 years ago, it's just interesting that they had been in, and still are really, the longest and worst revenue downturn in all of CAT's history, and really as they come out of this, probably inclusive of the Great Depression. So for whatever reason, mining bubble that popped and oil and gas bubble that popped, they happen to be quite low. And since they've started to come out of this, they've got their production systems working, they've got capital to actually manufacture the product that's coming back, and there's a lot of pent-up demand.
Also in focus, tax reform. The company taking a one-time charge of nearly $2.5 billion to write off changes in the way they have to account for previous losses and also overseas cash. Overall, though, the company says tax reform is a long-term positive. And analysts add Caterpillar could benefit not just from a lower U.S. rate, but also from full expensing, which incentivizes other companies to buy more equipment. But there are challenges. Executives hope to get a resolution to an ongoing tax investigation tied to a Swiss subsidiary soon. And as commodity prices do recover, costs to make all those machines are rising. Still, it was a strong quarter for a blue chip stock that's already soared 70% in the past year. For Nightly Business Report, I'm Morgan Brennan.
Fellow Dow component 3M also topped earnings and revenue expectations thanks to a strengthening economy across the globe. 3M also raised its outlook for the year and boosted its dividend. That helped lift shares nearly 2% to a new high. Late today, the Dow component Intel blew past Wall Street profit and revenue forecasts. The company reported growth in its data center operations. Intel also raised its full-year forecast, even as it warned investors that fallout from those security flaws could hurt future results. That didn't matter to shareholders in initial after-hours trading. Josh Lipton has more on Intel's results.
A number that Intel investors focused on right away in this report, $5.6 billion. That was how much revenue the company's data center group generated in the quarter. That's the unit selling chips for servers used by the big cloud giants, for example. Christopher Rowland of Susquehanna, who covers Intel, says that was better than expected and that the business unit showed real signs of pricing power in the quarter. Rowland notes that investors focus on that business division because it's the company's highest margin business and the fastest growing one. Client Computing Group, the division that sells chips for PCs, came in at $9 billion, a dip there of 2%, but also better than expected. For Nightly Business Report, I'm Josh Lipton, San Francisco.
President Trump arrived in Davos, Switzerland to attend the World Economic Forum today. He's scheduled to deliver a major address tomorrow to sell, among other things, his America First agenda to other heads of state and global business leaders. Today, he dined with European corporate chieftains, including the heads of Adidas, Siemens, and Nestle. The improved business climate has been a dominant topic of conversation, and in an exclusive interview with CNBC's Joe Kernan, the president took a slightly different tack on trade and the massive Pacific trade deal that he symbolically pulled out of last year.
I like bilateral because if you have a problem, you terminate. When you're in with many countries, like with TPP, so you have 12 if we were in, you don't have that same, you don't have that same option. Right. But somebody asked me the other day, would I do TPP? Here's my answer. I'll give you a big story. I would do TPP if we made a much better deal than we had. We had a horrible deal. The deal was a horrible deal. NAFTA is a horrible deal. We're renegotiating it. I may terminate NAFTA, I may not. We'll see what happens. But NAFTA was, and I went around and I tell stadiums full of people,
so you might re-enter,
or renegotiate.
Are you opening up the door to reopening TPP?
I'm only saying this. I would do TPP if we were able to make a substantially better deal. The deal was terrible. The way it was structured was terrible. If we did a substantially better deal, I would be open to TPP.
That's interesting. Would you handicap?
Are you surprised to hear me say that?
I'm a little bit, yeah, I'm a little taken aback.
Don't be surprised. No, but we have to make a better
I want to
deal.
know.
The deal was a bad deal. Like the Iran deal is a bad deal.
Maybe NAFTA, maybe not NAFTA. Can you give me any indication which way you're leaning? Because there's a lot of the CEOs that have been on here, they all seem to acknowledge that it's 30 years later, and there's a lot of changes that make a lot of sense, but to not abandon the deal.
We have a trade deficit with Mexico. Mexico, $71 billion a year, right? We have a trade deficit with Canada of a substantial amount of money. I have a number, but they keep arguing. They keep saying that, so I won't say it. I won't tell you it's $17 million, okay? We have a trade deficit with Canada. We have a massive trade deficit with Mexico. Got to do something. We can't continue to do this.
Are you leaning towards staying in, or would you really go out?
I've always said during the campaign, and as you noticed, and as you've actually said a couple of times, which I've always appreciated, I have fulfilled a lot of what I've said. And I'm only here a year. You know, I think I have 4 years and maybe another 4 years,
So
okay?
we'll see
keep
on
going. We'll see what happens.
tell you-
but Joe,
yep.
we have a $71 billion a year trade deficit with Mexico. We've got to do something. We can't have that. So will it be renegotiated? We're trying right now with Bob Lighthizer and the whole group. I think we have a good chance, but we'll see what happens.
Overall, the mood among business people in Davos has been exceptionally upbeat, a change from prior years. Here's a sampling of executive views on globalization, evolving attitudes toward it, and a cautionary opinion on optimism overall.
My hope is that we continue what has been basically a global view of the world that suggests that open borders without open in an untoward or an awkward way for us have served us all collectively well, including in the U.S.
I think globalization is taking just a break, some corrections in the developed countries. I think globalization is good. We see it daily.
People are optimistic about the global economy right now. It worries me about how optimistic they are. Usually when you get this optimistic, something goes wrong down the road pretty quickly.
Well, as for the global economy, the IMF recently increased its outlook for growth overall. Well, time now to take a look at some of today's upgrades and downgrades in the marketplace. D.A. Davidson putting an $1,800, yes, $1,800 price target on Amazon, the highest on Wall Street. The firm reiterated its buy rating, saying the recent Whole Foods acquisition, coupled with Amazon's cashierless technology, is a huge growth opportunity. Amazon shares up 1.5% to $1,377.95. Telsey Advisory Group downgrades shares of Best Buy to market perform from outperform on concerns the retailer could report negative same-store sales in upcoming quarters because of the lack of a highly anticipated product launch or two. But the firm did raise its price target to $81, up from $62. Best Buy shares were off a fraction today at $76.27. Telsey feels a little bit differently about the arts and crafts retailer Michaels. The firm upgraded the stock from market perform to outperform and hiked its price target there to $32 from $23. The reason? Michael's strength across a number of categories, and it is expected to benefit from the lower tax rates that start to kick in. Shares up nearly 3% to $27.16. And Pivotal Research initiates coverage on Foot Locker saying the shoe fits, buy it. The $65 price target the firm tags, it says it believes the retailer is in a better position than its competitors at a time when consumers are making more purchases online. Foot Locker shares rose marginally to $52.44. And still ahead, airline stocks have been on a steady climb over the past few years, but is the sector about to hit some turbulence? Well, the sell-off in the airline sector extended into this second day now. We reported yesterday that investors became concerned that United Continental's expansion plans could trigger an industry fare war. Today, both American Airlines and Southwest said they also had plans to expand capacity. More flights and larger planes can put downward pressure on fares, but the heads of American and Southwest said they are not concerned about adding extra seats.
We'll add some, they'll add some. These are the kind of things, that happen as an industry continues to mature. But it's maturity, around what, has become a much more rational sort of structure in terms of long-term competitiveness.
We're very well prepared to compete. We have a great plan for 2018. We're looking forward to continuing positive unit revenue trends, even with this competitive capacity threat.
Well, American and Southwest both topped earnings expectations. JetBlue came up a little bit shy. United, which led the group lower yesterday, fell again today by more than 4%. So are those airfare war concerns legitimate? And as fuel costs rise, where can we expect to see the airlines make up that lost revenue? Joining us to talk about that is Seth Kaplan. He's an analyst and the managing director of the industry publication Airline Weekly. Seth, nice to have you back again. I thought airlines were doing pretty well, i.e. in terms of profitability, by keeping capacity down and running flights really close to full. Am I wrong about that?
Yeah, and that's kind of been the playbook here over the past decade, right, Tyler? Match capacity very precisely with demand. You're right. The thing is, though, that, if all that mattered was, hey, cutting capacity to squeeze up unit revenues, the airlines would shrink forever. Why wouldn't they do that? Well, because when you constrain capacity, you also do something else. You push up unit costs. You become less productive. And what United is basically saying here is that this has all gone too far in their view. Basically, they feel that there's some room actually to grow a little bit more in their case and actually have a more beneficial impact on unit costs, push those down more than the negative impact it's going to have on unit revenues.
So if they do that, will there be as they add capacity, will there be downward pressure on fares? And if so, how much?
Well, they sort of say that there's basically not all growth is created equal. Some of their growth is in markets. Look, they started flights from Houston to Sydney, let's say. That puts a whole lot of additional seat mile capacity, as it's called, into the marketplace, but it's not going to have a broad impact on flight, on core markets. Flight from New York to Chicago isn't impacted in that. Also, they've added a lot in smaller cities, focused actually, adding in places like Wilmington, North Carolina, let's say. Well, that's not going to start a fare war with Spirit because, Spirit's not there. But look, overall, investors aren't wrong that this is supply and demand economics. And the more supply it's in the marketplace, yes, it will put downward pressure on airfares. This at a time, Tyler, when, because you have these rising airfares, airlines are feeling squeezed cost-wise. And what United is basically saying is, yeah, that's the problem. Now there are more cost problems than revenue problems, basically.
Right.
And they're trying to get their hands around that.
All right, Seth, we have to leave it there. Last, thank you very much. Seth Kaplan with Airline Weekly. Starbucks brews up a mixed quarter, and that is where we begin tonight's market focus. After the bell, the coffee giant topped earnings expectations, but disappointed the street with its revenue and same-store sales growth. Global sales did pick up, but still lagged analyst estimates. Shares initially fell in the extended session, and they also finished the regular day down fractionally. They closed at $60.55. Tupperware maker Newell Brands said it plans to evaluate strategic options for at least 10 of its brands as it looks to focus on its core businesses. The restructuring could cut in half the number of factories and warehouses the consumer products company operates. Newell also slashed its full-year earnings and sales outlook. Shares got hammered. They fell 20% to $24.81. Union Pacific said higher fuel prices caused its operating ratio to rise in the latest quarter. What's that? Well, that is the company's operating expenses as a percentage of its revenue. Lower is better here. Earnings were in line with expectations while revenue topped estimates. The railroad operator's CEO also said he hopes the new tax law will lead to more jobs.
What I think the big impact of tax reform is going to be is in our markets, it really does make our customers more competitive, both globally and locally. That should generate increased demand, and as demand increases, we'll be using that cash to invest so that we can handle that growth and grow, hiring people, again, at very attractive wages.
Shares of Union Pacific down 5% on the session at $133.60. Meantime, the upscale furniture maker Ethan Allen reported stronger than expected earnings, but said a drop in store traffic caused same-store sales and written orders to fall. The company plans a new marketing campaign and hopes it will bring in more customers.
We now feel comfortable that our products, our offerings are in good shape, that our manufacturing is better, and we are going to increase our advertising this quarter by 33%.
Ethan Allen shares fell 7% to $25.05. And the grocery chain operator Kroger reportedly in talks with the Chinese e-commerce giant Alibaba about working together. Reuters says the discussions are at an early stage and may not result in any kind of partnership, but Kroger shares rose more than 2.5% to $30.26. Alibaba gained 1%. They finished the day at $198.33. And to the economy now, where the number of Americans filing for unemployment benefits rebounded from a 45-year low last week. Jobless claims for state unemployment benefits increased 17,000 to a seasonally adjusted 233,000. That rise less than expected and points to a labor market that is still getting stronger. A key part of the economy, of course, is housing, and the housing market slowed in December. New home sales last month fell sharply. So did existing home sales, which we reported on yesterday. So is this just a winter slump or a warning for the spring? Diana Olick reports tonight from Washington.
Whether it was older homes or newly built homes, fewer of each sold in December, and you can't really blame cold weather. For new home sales, the smallest drop was actually in the Northeast, where weather was worst.
There's 3 bedrooms in here.
For existing homes, the problem is likely lack of supply, more than weather. The number of listings in December was 10% lower compared to a year ago. That's the lowest supply since the realtors began tracking it in 1999. Low supply continues to push home prices higher.
A lot of folks out there looking to buy a home are already facing an affordability challenge, and we're expecting mortgage rates to go up, certainly not down for any reason. So it's going to squeeze affordability going forward. So it's already a tough market, especially for first-time buyers.
Mortgage rates have jumped significantly just since the start of this year, with the 30-year fixed at its highest level since last spring. That could have buyers in the short term trying to get in fast before rates rise further.
The increases that we've seen so far have only gotten people off the couch and into the market. So people are worrying that they need to hurry and buy a house now before rates go up further.
That could mean an early start to the usually busy spring housing market, as in right now. Builders especially could see a jump in demand as mortgage rates rise because newly built homes are more expensive and potential buyers have even less wiggle room in their budgets. For Nightly Business Report, I'm Diana Olick in Washington.
The home builder Lennar's mortgage subsidiary is under investigation by the Justice Department. Federal investigators have subpoenaed records relating to the underwriting of Federal Housing Administration loans. Lennar made the disclosure in its annual report filed with the SEC. Coming up, Amazon's hunt for a new home enters a new phase and takes a secretive turn.
I'm Scott Cohn at the U.S. Conference of Mayors winter meeting in Washington, where the sweepstakes to win Amazon's second headquarters is a big topic of conversation. But a lot of those conversations are about to dry up. We'll tell you why, coming up on Nightly Business Report.
The competition for Amazon's $5 billion second headquarters project is entering a new phase now that the company has narrowed the 238 initial bidders down to just 20. All of the hype surrounding the start of the process is going away, and with it, a lot of the transparency. Scott Cohn reports tonight from Washington.
The hype has been impossible to miss, state and local officials outdoing themselves to impress Amazon. Now, with the field down to 20, finalists flock to the U.S. Conference of Mayors meeting in Washington up for some good-natured trash talk.
There's a lot of talking going on. What you'll find among these mayors is that we're all pulling for American cities.
But multiple mayors confirm Amazon is now telling them to tone it down. Phase 2 of the process will be conducted largely in secret, the company seeking more detailed information about what each city has to offer in terms of workforce, location, and incentives.
Well, it's a very secretive process, and obviously we're bound by confidentiality. But, we're continuing to do what we did, last week after the announcement, which is sell Miami. and broadcast to the world, not just to the United States, that Miami is the place to be for Amazon.
But not included in the conversation, for the most part, the taxpayers who could foot the bill. Most of the finalists, like Philadelphia, have been silent on the details of their bids, with no apologies.
If I were to lay out now what I think we should offer, it would be criticized and looked at and determined whether or not that's good or bad.
The secrecy marks a more conventional approach to economic development, experts say. Most projects are negotiated outside the public eye, like the giant Foxconn electronics plant slated to be built in Wisconsin. By the time a state economic development board finally got to review the $3 billion incentive package last year, many of the details had already been worked out and announced in a White House ceremony. The stakes in the Amazon race are even higher, with the few places already showing their hands, like New Jersey and Maryland, talking about billions of dollars in tax breaks for a project that will transform wherever it winds up. Mayors are vowing not to be drawn into a bidding war, but for now, control of that belongs to Amazon. Scott Cohn for Nightly Business Report in Washington.
Market recap now on Wall Street. The Dow closed at its 10th record close of the year. The blue chip index advanced 140 points to 26,392. NASDAQ dipped nearly 4, but the S&P 500 added about 2. It also finished at a record. And that is Nightly Business Report for tonight. I'm Tyler Matheson. Thanks for joining us. Have a great evening, everybody. We'll see you right back here tomorrow night.